Welcome back. It's been like more than 2 weeks now. We didn't trade, and our last analysis was actually 2 weeks back. And this week, I am back with analysis because I am seeing pairs are actually moving in a good direction. Of course, the main pairs we used to trade not performing the same way, but for now, we do have pairs we can start trading with. We don't need to wait for the war. But of course, we need to be cautious because at this point, because of the war, markets getting affected in different ways. For example, JPY used to be a safe haven for a very long time. Any time there's some war or something is wrong with the world, JPY used to be used as a safe haven where JPY would climb up. So all the other pairs like AUDJPY, EUROJPY, USDJPY, all of these pairs will drop. But we didn't see that. For example, AUDJPY on Friday it did come down, but majority of the time we can see the price has actually moved up. It did touched our trend line to the upside. I had to move it down to make it touch because this was a fresh trend line. So I have to level with this. And now we have more of an accurate version of a trend line. But anyway, price is actually coming back to give us an entry on AUDJPY. I'll be looking for buys on AUDJPY shortly. So we'll start with the analysis. Make sure you always wait for confirmation. This week and the coming few weeks are going to be a little risky. And especially this week, there is a lot of news coming up. I checked the forexfactory.com and I could see on Monday there is news on CAD, then we have AUD, then we have USD, CAD, USD again. So many news. In fact, there is a Fed funds rate right here. So at this point, if there is any changes here, you will see the market moving in a huge volatility. So let's start with the analysis Euro GBP. Euro GBP, we can clearly see the market has moved down. And last Saturday, I did a private analysis for myself. I did only two pairs, which was Euro AUD and Euro GBP. And if you are in the boot camp, you guys know that I took this trade. I took this trade and it hit 1:3. So it's only one trade I took, and that gave me good money. It was very quick. Like Monday, it started in the morning, and Wednesday, we were done with the trade. So a perfect trade. Euro GBP, I didn't enter because I did see this price action. I wanted to enter, but the stop loss was huge. If I wanted to enter this trade, I would have to place my stop loss around here. At this point, I was looking for a close below this line, but then again, my TP would be not that good. So that's why I didn't enter Euro GBP at all. And it's great I didn't because at the end it would have consolidated at 1:1. Now let's look at what the market is giving us this week. So weekly time frame we have the price touching the EMA, and I can clearly see on the weekly EMA when the price has came down here that the price in fact retested this level and then moved down to a level like this, right? Even though all of this is a wick, but this is a very good information. Next, on the weekly time frame, again, we see a good retest. When there's a break, there's a retest on the weekly EMA, and then the price goes down. Right here, it didn't retest, but you can see the candle was very big, so a retest was very difficult at this point. But right here, the candle is very close to the weekly EMA, so we can expect a retest. Definitely, we can do that. The weekly time frame is bearish. I hope this makes sense. Weekly time frame is bearish. Daily time frame is bearish, right? It already gave a retest at this point on the daily time frame. 4 hour price is slightly bullish because you can see the clear structure. Right here, this is the lower low, and then this is your lower high, this is your lower low. Price broke structure, became bullish, but that is not a concern for me. I have two time frames saying it's bearish. All I need to do is find a good direction where I can target a TP, let's say a little below this. Hold on. It's kind of creating. The only problem I see here is that the price has a good support at this point. At this point, it has a good support, and when the price comes down to here, it might just move up again, continue going up. So the trend is definitely saying that the price we should trade in a bearish direction, but we have support, and this support has been retested multiple times. Price is now kind of reacting from a new support zone. Yeah, you can see right here. All right. So instead of we trading from here, what we'll do is we'll wait for price to come down to this level, retest, and then move down. When this structure is broken, only then we trade. I know there is an opportunity where we can short it from right exact this area, and then we can have a huge TP, but a confirmation is much more important because getting a stop loss hit is not the right choice. So instead, if you are getting a confirmation where price comes down and it is retesting this level and then moving down, then we have a very clear window of the next support zone, which is around here, right? It's around here. So we can expect a really good target. We have resistance. We definitely need to make sure that we cover this liquidity areas, this liquidity area, this liquidity area. So when the price is retesting, it will be kind of a wick for us on the daily time frame, and the price can easily start going down. I can see the price has moved here in 4 days, moved up in 4 days, again here. So it's not going to be a very big trade like we had on AUDJPY recently. So all we need from price is on the 4 hour time frame, price to come down here, retest this zone, anywhere around this zone, and then continue. Once we see continuation, we can target a TP till here. I'll definitely update the target, but I can clearly see that price easily goes down to this level, and this is the liquidity area. Now we'll just see a few more things. When the price is coming down, what happens? So right here, when the price was coming down, you can see it did a very similar price action and it moved down, right? But we see some consolidation at this point. 4 hour EMA, price touched the 4 hour EMA, and then finally it moved down very smoothly. Now again, while coming down, I'm seeing a touch here and then continuation. Again, this is a very good point to see. All right, price didn't touch this level. Price moved up, retested, moved down, retested this level, and then rejected. So this area was good. So we need to make sure we are covering our stop loss till here. And if possible, let's try to sell from the 4 hour EMA. I hope I'm making sense. We can clearly see price is respecting the 4 hour EMA around this area. And in the recent times, not exactly, there are some candle closes, but again, it is respecting this area. It is respecting right here for the short movement. And from here, it has continued from this direction. So we have two kinds of trade. Let's say I want to enter this trade, but one direction is this, where price is coming till here and it is retesting and then it is clearly rejecting to this level. Second, when the market opens, if I see a retest on the 4-hour EMA and then the price starts going down, I'll target again this level. The only thing will be that once the price moves down to this level, I will put a break even. I'll put a break even, and the reason is very clear and simple that price can easily start going up from this level. So I don't want to take a loss. So my strategy would be rather take a break even and then continue. And on the weekly time frame, now of course there are huge gaps we are seeing on Monday, but Euro GBP didn't have that much of a gap on Monday last week. So definitely I'm not expecting another gap. So let's see what the market does. We'll just note this down. One, 4-hour EMA retest and then push down. Okay, one sec. When it's moving down from the EMA. All right. Let me see 1 hour time frame. All right. All right. Below 4-hour EMA retest and then push down below the 1-hour EMA. The reason is simple because 1-hour EMA can act as support, and I don't want to be in a trade where I am taking a bearish trade and 1-hour EMA is just below. So once the 4-hour EMA is retesting, I want the price to close below the 1-hour EMA and then I can take a trade. And while this is happening, I'm sure the EMA will be a little up. 4-hour EMA retest and then push down below the 1-hour EMA. Early stop loss management is required. I'll see about this. Let's see how the trade progresses because we might not have enough room to actually put a stop loss. So the exact strategy will be when we see that price action. Second is retest the weekly EMA. So once the price breaks this daily support level, it becomes resistance. So it's an SR line. So I also want to see some kind of rejection on the 4-hour time frame. So of course, entry will be shared in the group, but it's always better to keep an eye by yourself. Next, AUDNZD. So weekly time frame, we can clearly see the price has been moving up really nice. The price was bullish before the war, and it's still continuing the bullish momentum. You can clearly see the first week right here. This was the war week, and it didn't do much. It continued the action. Of course, there's some consolidation at this point, but again, it's nothing major. Now, this is the weekly time frame for us. Definitely, if we'll see if we have some resistance or support. There's a resistance at this key point. All right. All right. All right. So let's drop some lines. This is making much better sense because there is one, almost two, three, four touches on this level, and there's this one as well. Then there is this one as well. So we have good touches around this zone. And what I can clearly see is when the price is going up, it is retesting this zone and then moving up. But this is happening on the weekly time frame. This is happening exactly on the weekly time frame. We don't take entries on the weekly time frame. So we'll have to see what we can do here. This is 2013. We'll come back to 2013 again on the daily time frame. All right, I can see while going up, the price has taken liquidity from here and then moved up. Right here, it did the same thing. And then that didn't happen again. But we do have a level right here. I hope you guys are able to see this. We'll just mark these levels. Right. I have a daily SR right here. You can see there's one, two, three, four, so many touches around this level. And the price has just moved up. We'll see whether it has done a touch here on the daily time frame or not. But this is a really good support level. All right, this movement is already gone. You can see the price exactly did what I said. It has touched the price exactly at this level and then continued up. And the price action has already moved up from here. And now we can definitely see some kind of price action where price is retesting this level. So we have one more thing with us. One more thing, which is 4-hour EMA. The price you can see is retesting and then moving up, retesting, moving up, rejecting on these levels and slightly a break, but again moved up. And then again, there's a retest and it moved up. All right. And also with this, we also see this clear information here that price, when moving up, it retested at the exact same level with the 4-hour EMA and then moved up. So what we want again is price to come down to the 4-hour EMA and then move up. I hope I'm making sense. I hope I'm making sense. The price should come down to this level where 4-hour EMA is reaching at the same point, and it should retest that level and then move up. If it is not exactly happening around this level, it's fine, but it should be touching this level, the 4-hour EMA, and then moving up. The target will be updated because I'm not going to target this level exactly, but I will probably try to get some liquidity areas, a lot of things, stop loss accordingly. But putting a lot of time right now is not a good idea because this might not happen at all. So when the trade comes, I'll definitely look back at price again, try to figure a stop loss where I'm able to put some liquidity levels inside it, and then set a take profit as well. Now let's mark the screen. If you see, I'm not doing the exact same pairs we used to do, like JPY USD pairs for now. And the reason is very simple, because these pairs are reacting really well during this war period. Again, this trade was based on very simple thing. One, liquidity level. I could see at this point there was a lot of liquidity areas. You can see liquidity levels 1, 2, 3. So you can see my stop loss is still above this liquidity level, right? So I was trying to cover as much as I can. Then there are more liquidity levels right here, and my stop loss is right there, right? So I try to cover as much as I can. And there's one other simple thing, that there is a daily support zone right here. The price came down, started rejecting it, so it acted as resistance, and then price started moving down. So there's one story to this. And then 4-hour EMA price has been continuing from the 4-hour EMA for a very long time. Even though we see there's some break right here, but again, price eventually pulled in and started moving down. So the 4-hour EMA is getting respected from a very long time. This trend has been going on for a very long time. So why do anything different from here, right? We'll again do exactly same thing, exact same thing. We'll again take a trade based on same direction, where we are saying the 4-hour price should reject from the 4-hour EMA. Second thing, I want the price to come down first, okay? I want the price to come down and break the 1-hour EMA. You can see right here, I have entered after the break of 1-hour EMA. So again, I'll need the price to break the 1-hour EMA, and then we'll enter the trade. I hope this makes sense. Price should retest the 4-hour EMA, come down and break the 1-hour EMA, and then we'll set a target. The problem right here I can see is there's a lot of liquidity getting grabbed from around these levels, but we can have a target set right around here, or maybe right around here. That should give us easily more than 1 is to 2 to 1 is to 3, and that should be fine. The second level can be this easily, but we'll have to look at more history when the price comes down. This is the liquidity level. You can see the price came here. There's a clear wick, and then price moves up. When it's coming down again, there's liquidity taken from here, right? So we can't expect the target to be this, because eventually price, we know there's a huge chance that price will eventually move up. So rather, we'll put a target right around this level. I'll in fact drop this line right here, and that's it. The trades are very easy. I don't think so I put a text right here. Did I? No. Let's start adding text. 4-hour EMA. Let price retest the weekly support zone, and then make sure it is retesting the 4-hour EMA as well. Once we see continuation breaking the 1-hour EMA. So if the 4-hour EMA is below, that means the 1-hour EMA is definitely above the 4-hour EMA. So when the price is retesting the 4-hour EMA, that means there is a resistance of 1-hour EMA just above. We need to see the price breaking that to enter. Breaking the 1-hour EMA, we can enter. All right, moving to next pair. Again, same thing. Let the price retest the 4-hour EMA. Now, of course, if the price is breaking the 4-hour EMA and just continuing up, the whole analysis is invalidated. Doesn't matter if it is again pulling down. For example, if the price goes from here to here and then it's coming down, and then we see some continuation, it's not worth it, because the price did a huge gap. If there's a price action where candle is closing just a little above, or maybe going to some extent where it can easily come back, and doesn't change much with the EMA, then it's a different story. But if it's creating a very big price action, just breaking the 4-hour EMA, then this trend is over. We don't want to enter. Let the price retest the 4-hour EMA, then continue bearish, breaking the 1-hour EMA, and then we enter. I know it sounds very simple, and that's how you make money. Making money is very easy. You don't have to complicate it. Only thing you need to make sure you always put your stop loss at the right places so that you cover liquidity levels. If you don't cover liquidity levels, you will easily be, stopped out from the market. Now, it's the exact same thing we are looking everywhere at this point because this is what we see in the market. BTC, I'm not trading BTC. I think 2 weeks back we were looking at BTC USD, but now I'm not interested. I'm not interested in gold. I'm not interested in BTC USD. I'm also not interested in silver. This is the best pair. All we need now is price to again, you know the story. We need price to come down, retest the EMA, come down, break, and then we enter, right? I can easily enter if I see an engulfing like I did right here. We all entered this one. In fact, a lot of people entered this trade with me. And we are exactly looking for the same price action, same analysis, exactly same analysis. All we want is 4-hour EMA to retest and then come down and then move up. I'll tell you, I actually shared the screenshot in the bootcamp group last night, actually. And that is the reason why we enter these trades based on the EMA. Once we see some kind of rejection from the 4-hour EMA, that means if price is breaking that level, it is easily going to act as a support as well. If it has acted as resistance, it can easily act as support. If it has acted as support, it can easily act as resistance. So if we see a rejection right here, that also means once the price is breaking this, we can easily rely on this 4-hour EMA to continue the trade and not actually put us in the drawdown. I hope this makes sense. So again, we'll target these levels and let's see what happens. Although this is happening very quick, there are no structures. There are not much structures here. In history, we have seen very good structures, but again, right here, this one happened quick and then it moved up. But if you see the way it moved down so fast and then it took a very long time to actually continue going up. And this happens. There's another story behind this where you see a price action doing a lot of movement in a very short period. After that, you see price actually slowing down. That happens with the market a lot of times. That you see rapid actions where huge candles are formed, and then price will eventually sit around the same price for more than a day, sometimes a week. So when you see price action like this, you can expect the price to actually slowly create price action like this. When it is doing that slow, you shouldn't be running out of patience. Don't run out of patience. Let's see AUDJPY exact same analysis. I'm not going to write any text here because it's very easy. Euro USD. Let's remove the previous analysis. The market has changed in the last 2 weeks. You can see huge gaps. And then this one again, a huge gap. Price moved up and moved down. I was in fact looking for a trade right here, but I didn't for one simple reason because I didn't want to enter a trade where price would just get stuck right here. I like this price action. You can see I have support resistance lines already marked. This was already there. Price exactly rejected the resistance line and then started moving down. And then this price action was pretty good because 4 hour bullish, bullish, and then this became bearish, and then it created a leg and then started moving down, right? So another elbow, a great engulfing candle. If I look at 1 hour and then price, you can see actually created a really good engulfing candle where it ate almost five, six, seven candles, right? And you can see the price actually turning bearish because these candles were big at this point. And now these green candles turned very small and red candles are big now. So this is kind of showing you beforehand that price is now turning towards the sellers. Sellers are now in control, right? These candle sizes give that information. So I was interested, but I couldn't because it could easily consolidate. Now let's see what we have this week. Again, price is breaking this weekly time frame. We can see it clearly here. The price moved up, came down, retested this level, and then moved down. Again, here in history, the price is coming down, retesting this level. But the only thing I'm seeing here is that it is spending a lot of time around the weekly EMA. Right here, rejected. No. Again, it's spending a lot of time at the weekly EMA. The only thing we have this week with us is that the fundamentals against euro is strong. The USD during the war performs really well. So we'll try to see if we can make something up. We can, find some good trade over here. So we have this one zone right here. Okay. This is a really good liquidity level. The reason is very clear. You can clearly understand why liquidity levels are really good because you don't see too many wicks around it. You see that price coming up, and from right this point, the price is rejecting with a huge, you know, huge distance. There's a very big candle forming here, and then the price didn't come up. It was not easy to actually take control of this level again. Same here, the price exactly from this level. You can see it's almost to the pip. There might be a minor difference in the pips, but again, this is a very good level because the price can easily reject from here. So once we have this liquidity levels in our stop loss, that's best for us. We give our trade a really good chance to actually move in our direction. So weekly is bearish, daily definitely is bearish right here. Now, this is a really good support level as well and a resistance level. The price is not exactly rejecting from this level right here, but the wicks have told us in past it has moved. So let's see if we can create another zone where we see really good touches around this level. All right. There's one, two. The only problem is this is daily time frame and this is a very huge distance. But we don't know if the price will actually come up till here and then move down. It's good for stop loss, but if we are not covering this in our stop loss, then again we are in a bad trade. I hope I'm making sense. If we don't have this liquidity level in our stop loss, it's a bad trade. And the reason is very simple that price can eventually take us out on any fundamental news. When there's a fundamental news, there's a huge wick creation a lot of times, and it can easily wick us out. So we definitely want to enter when the price is coming up and retesting this level. So we'll just mark this weekly SR. Price come up here. retest this, and come down. So maybe we'll eventually get 1 hour or 2 hour EMA. Yeah. So 1 hour is almost here. 2 hour is almost reaching here. So when the market opens up, there's going to be a wick, right? For the weekly time frame. If you are in the boot camp, you already know the concept. Whenever the market opens, it creates a wick on both the ends. On every weekly candle, you will see there's some kind of a wick, and a small wick like this is rare, right? So when the market opens, we can easily see a wick coming here and then a continuation. So we can take an entry from a 1 hour EMA or something like that. But I'm seeing that the price is not actually retesting the 1 hour EMA. It's in fact retesting the 30-minute EMA. So when the price is coming up, and let's say it is retesting the 30-minute EMA, and then I see good rejection, a good structure, I might enter this trade. And if I enter this trade, I'm gonna put my stop loss above this liquidity level. I hope I'm clear. Because there's a really good 4 hour structure already here. So I don't need to worry much about this. And we have our liquidity level with us. 30-minute price comes up, retesting this level, and then continuing down below the 15-minute EMA. I'll take an entry. Let's put the text. One, let price retest the weekly resistance. Yeah. Let it, how is it looking on 4 hour? Let me see this. Yeah. Okay. Second thing, make sure 1 hour is bearish to enter. Always make sure your lowest time frame, 1 hour, something like 1 hour is bearish. 30-minute, 15-minute, I don't care. 1 hour should be bearish. Make sure 1 hour is bearish. Okay. Let the price continue going down. Okay, this is one. Second, let price retest 30-minute EMA. Let price create bearish structure on 30-minute. We'll see if we need 1 hour to be bearish or not, because this is a different kind of price action we are looking for. This is completely different, right? If the price is actually touching the weekly resistance right here, we don't need the stop loss to be above this. And the reason is very simple, because it has already hit the liquidity level. The second time coming up, it's probably going up. So even if your stop loss is just above, it's probably going to get hit for sure. So you don't need to make your stop loss that big. But for the second one, where price is just retesting the 30-minute EMA and it is not touching the weekly SR, which is also the liquidity level, and then it is creating the bearish structure, you need to make sure you have this liquidity level, the weekly resistance level with you. Your stop loss should have it. So we have almost like 5 pairs. It's too much. Let's do one USD CAD. Let's see. We already have too many pairs. Generally, we do only 4 pairs. USD CAD price is really nice. I wanted to enter this one as well. The only problem was on the 4 hour EMA. I wanted the price to actually break the EMA a little bit, or maybe retest properly with structure and then continue going up, but it didn't. It just, created a candle, this one, and then started moving up. I was looking for a structure like this. You can see I have a line drawn already here. I was looking for a structure like this. My direction was clear. The price clearly moved up. and eventually reached the target. The only thing I wanted was a structural something like this. And even this one, the analysis 2 weeks before was good. The only thing is it did a lot of consolidation. But now the price is moving really nice. If you see this daily time frame, it has actually just repeated the exact same thing. Exact same thing. You can see the pattern right here. Price moved up, came down, moved up, came down. If you remember, maybe a few weeks back, I was just discussing it's doing something very similar. I was discussing with you guys what exactly is happening. Now, the price is kind of moving in the same fashion, and I can clearly see that the price has actually moved up from right here. Once the EMA breaks, it is retesting this level. Let's look at more closely. Yeah, it almost touched this line, almost retesting this level and started moving up. Now, all of this price action actually happened a little up. This one is happening a little down. All right. But our target is exactly the same. It's actually this one. My target is this one. The price can easily go around here. Okay. I'm not going to give a name to this because it's just a target line. Now, let's see what we can do here. On the 4 hour, we can clearly see this level has been acting as a resistance level, right? I hope this is making sense. And in history, the price has eventually, you can see there's a price action right here going up, and then price never came down to this level, right? But we'll also see if we have any liquidity levels right here. The price moved up, came down. There's some liquidity level right here. There's liquidity level right here. All right. Mhm. I think this is going to be a really good trade if we get it and if the market behaves nicely. All we want for the price to do is just break above this level. The only problem with these Mondays is that all these charts are opening with a huge gap, right? So if I say I want the price to come up here, the price can in fact open up right here. That's the only problem. But if that happens, this analysis is down the drain. Don't use it anymore. Don't need to enter this trade. But if the price is opening a little down and then moving up, then we can definitely enter. I want to see a good close, a 4 hour candle close just above this level. Or if on the 1 hour time frame, I want to see a candle close above this level. If I see that, I'll put my stop loss around this level and then enter. I hope this makes sense. It's a very easy trade. But if you see a 4 hour bullish candle, it's much better. The reason is very simple. Uh, because we can clearly see a 1 hour candle going up right here. Don't enter the market on the first hour when the market opens. Instead, wait for maybe London session, London or New York. Don't enter in the Asia session because we might see a lot of consolidation after that. So the problem is, let's say the 1 hour candle opens up and goes till here, and then the very next candle can easily create a huge price action towards the bearish side and eventually make it a 4 hour bearish candle. And once that is happening, you might see more 4 hour bearish candles. But if we see a 4 hour bullish candle, then a continuation is very easy. That is shown in recent history, and we can definitely use this level as a stop loss. If any of that happens, I'll share the entry with you guys. I'll also remove USDJPY because we don't need to look at more pairs. We have already looked at too many pairs today. All right. Daily 4 hour time frame. Let Price create a new high on 4 hour time frame. That's it. The target is already marked. The target is here. The stop loss here. It's a good, really great risk to reward. In fact, there's nothing major required here. The 1 hour EMA is very fast, so we can't wait for it. We might have 30-minute or 15-minute EMA when the price action is doing exactly that. Let's see. I'm not going to enter before London session. That's for sure. If the price is far from it, if in London session, if price is here, then of course, I'm not trading this pair at all. We are done. If you have any questions, feel free to ask. If you have no questions, you can just say no, and we'll end this call. The analysis will be available by tomorrow on my YouTube. Great.